Hello, fellow traders and wonderful traders. Dadas here, speaking to you from the Dadas trading room on the Discord platform. And we are going today. This is Monday today, and we are going to go over the daily recap. 18th May 18th, right? Monday, May 18th. The daily recap. So the recap of my trading on the DAX 30 index. So as we can see clearly here on the M15 chart, the DAX index has made a very significant upwards rally today. A little bit unexpected, however, I got a little bit confused in the beginning of the of my trading. Why? Well, first of all, you can see that when I was here on the market, so at this level, the market had already made a distance of over 300 pips, like 310, 314, something around that. I don't remember exactly. The measurement here shows 314 pips. So I was basically 314 pips was already a distance that was pretty much in the higher averages, right, of the last at least 2 weeks. So yeah, because the market in the last 2 weeks, the market made smaller distances, even sometimes below 200 pips. So I was a little bit, I was thinking about what the market could be doing right here, and of course I was trying to measure it out, but I guess I made a wrong measurement, because I was trying to measure it out from down there. And I was trying to figure that out somehow. Well, somehow it didn't fit. It didn't fit right. However, on my trading, here on the trading chart, right? Because I have these charts separate, my analytical chart and my trading chart. First of all, I decided to go long right here. I measured it out and I decided to go long, but all of a sudden the market began to go. I mean, it refused to go up, right? It refused to go up and then started going down. I mean, like, basically I got fooled by this kind of price action, and I even started trying to measure the measure the whole thing in the other direction. So like this, right? I was trying to figure it out like this, and something like this, and I looked here, and all of a sudden I realized, I thought to myself, well, looks like they're gonna go down, right? I was thinking like this, that the market is probably at the daily high, over 300 pips. They are probably going to go down. So I turned around. I got out of this trade without thinking much, like minus 20 pips, and I turned around at 1.4 lots, so double, like a martingale, right? Well, all of a sudden the market, instead of going down, turned around and started moving up. Now I thought to myself, this is something. I thought to myself that this was something really not right. Because they with this type of steady movement upwards, I thought to myself, this is not right. I mean, and they are breaking the resistance. So I turned myself around at 1.4 lots again. I decided to take this loss and turn myself around to 1.4 lot. And then I thought to myself, well, if they're going to go up, I might as well, I still have enough room, so I might as well also open a 0.7 lot. So I'll be like, I'll be hedged, sort of, right? I'll be hedged. So, well, not exactly hedged because I've already closed my losses, but yeah, but in this kind of sense, I'd be hedged. And of course, the market started moving up, gave me some small profit, and I got out of it because again I thought to myself, well, maybe there is another resistance over around that level. But what I did, I decided to measure the market from here. In other words, from the beginning of the Frankfurt session, ignoring the rest. And I started. I said, okay, so this was the first consolidation, right? Now let's see what the market is doing. Of course, I was looking at the M5, right? And I thought to myself, okay, so now let's look at what the market is doing, right? So and let's go back, right? Okay, over here. And I thought, you see, like now, like in this context, we already see what's happening right here. So in other words, if I had measured it correctly from the beginning, so in other words, I would have had to measure this consolidation exactly right there. Yeah. So now, looking at this picture, all of a sudden we see that basically I didn't really get in wrong. I mean, sure, there wasn't much of a price action at this moment because the market went sideways. So basically, perhaps I should have waited it out. And even the moment where I got in short was it turned out to be a much better moment to get in long, right? But I should have waited it out for some kind of concrete price action. So maybe, and exactly I got in those longs right there, in those two longs, exactly where I was supposed to. So basically, these two trades were made out of the ass, I would say. So basically, I was again concentrating on the movement of the candles, of the current candles, instead of looking at general candle price action and breakouts from consolidations. Right. So yeah. Now, being already at this level up there, so of course I was. Now I said, okay, I got the context, so now I'm gonna continue and move this up, right? So to this context. So yeah, and then I thought to myself, well, it looks like they still wanna go higher. However, I'm a bit skeptical because again, they're making a lot of pips. I mean, like you see, the market actually made 672 pips, which is well, basically a little bit on the high side, right? I mean, we had a certain time when the market, when we learned about this COVID-19 thing and about the virus that's causing it, then the market all of a sudden plunged and the volatility was even greater. but I was kind of, like cautious on the cautious side at this moment, because I really don't know what's gonna happen. So I thought to myself, but it looks like they're moving up, so let's get in with 0.1 lot, so a minimum lot. Now, of course, I set my stop loss, and I thought to myself, well, even if I lose it, it won't be so, it won't be so a big loss, because only a couple of dollars, so it doesn't really matter. But the good thing right here, you could ask me, okay, but why didn't you get out somewhere right here, and why didn't you trail the stop? Well, for two reasons. The first reason is that I went in with a minimum lot, so psychologically I was like, okay, whatever, right? And the second thing is that the lawnmower broke, and we went with my son to take a look at it. what happened, right? Yeah, and basically I jumped in at a certain moment. I just jumped into the house for a moment to have a look at what's going on, right? And then I saw this situation. I saw that that the price was already above the take profit level. So I moved my stop loss to the take profit level and watched the market for a short while, like a minute or two, and I decided to get out of it at 90 pips. Well, okay, fine. I mean, this is for me, it's basically a very good profit, and basically a very good trade. A trade, well, perhaps again not taken at, well, I would say it was taken at the right moment, because we have a breakout. We have this candle, we have a small consolidation, and then we have another candle that's a breakout candle. So basically, I've waited it out to see whether they would be going down or not. They didn't seem like they would be. The market wanted to go down. So yeah, we can see that it actually did consolidate for quite a while. Let's 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55, 60. So basically 60 minutes, and then 65, 70, 75, 80, 85, 90. So that's 1.5 hours and 5 more minutes. So if we hadn't been working on the lawnmower, basically I might have most probably I would have gotten out of it. So it was something like more of a set and forget, right, type of trade. But I know I was very satisfied with this trade, of course, because it's not often that I make such trades. So what happened next? Well, next I had to move this upwards, because there was another consolidation right there, and I was also thinking about it. Well, I said, well, yeah, it also looks like the market doesn't want to go back down, but it's going back up. Perhaps it's I don't know if it's going to reach that level or not. Like you see, I've worked a little bit today on this indicator and added labels with distances. So basically, the distance right here is all of a sudden between this line is all of a sudden 101 pips, right? So over here it was already 105 pips, right? Over here. These distances, you see, they're smaller, and the other label shows the distance from the zero line, right? Yeah. So basically, that's the way. Yeah, I mean, I didn't take this trade because it's the ending is the end of the day. Well, hell knows if they're gonna go higher or not, or if they're gonna reach that level or not. So I left it alone. But as you can see, in measuring it out from this, yeah, we had 95 pips, so theoretically in the range, right? In the range, but the market didn't actually reach that level. So basically, if I had entered, I would have probably gotten out of this trade because of the ending of the day, right? So like somewhere near the day, and definitely, if I had waited until a sudden drop like this right here or like this, I would have been here out of this trade. So yeah. Okay, so that's what happened today. I think that a pretty nice day, even though I got a little bit confused right here in the beginning, but it happens. I mean, it happens. The most important thing about this whole thing is that you are able to turn around. I mean, figure out what's happening, and well, there are two options. Either you stop trading and leave it for the next day, or if you are watching the market and if that's your job, then you turn around and you go together with the market, right? And that's that. Basically, that's one of the biggest barriers that a trader or a beginner trader has to overcome, or stumbling blocks, is that we always say people always want to be right, yeah, but we need to understand that trading the markets, we can never be right, and I like to put it this way: we can't be right because we can't be wrong. Why not? People say that, yeah, you were wrong, so you lost. No, I can't be right and I can't be wrong because I simply don't know, right? So you can only be wrong if you knew something but you somehow made a mistake. You can't make a mistake when you don't know. So you can't be right and you can't be wrong. But the only thing that is right is the chart. The chart is always right. The chart cannot be wrong, right? So if we understand that we have to follow the chart, that's why it's so difficult, because sometimes the market simply consolidates in a relatively small range, and what happens then? Then we get confused because we don't know what to follow. We have to follow the market. If it's consolidating, it's consolidating, right? If it's consolidating, it's consolidating. It's going sideways, so we have to follow the market. We simply don't make a decision because we don't know what the trend is. Okay, so that's it for today. Please like, please subscribe, join my Discord server, the Dada's Trading Room. All the links are below, and become my Patreon on patreon.com/Dada's Trading System Workshop. By becoming my Patreon at $17 per month, you get the VIP role on the Dada's Trading Room, and you will get lots and lots of benefits. Okay, thanks a lot for today. See you tomorrow. Bye.